Warren Buffett says a real estate storm is coming. Over $2.6 trillion of debt looming over the U.S. real estate market.
They came for the sun, the low taxes, the dream. Prices soared, governors bragged, and buyers lined up for a slice of paradise. But now, the smartest investors are quietly walking away. Insurance costs have exploded. Deals are collapsing. And behind the palm trees and pastel condos, a storm is building, one that doesn't need to make landfall to wreck everything. What's really happening in Florida? And why are insiders cashing out while the headlines still call it a boom? Let's dig in. The boom that looked bulletproof. 2 years ago, South Florida was the finish line for the Great American Migration. Nearly 330,000 people packed up and moved to the Sunshine State in a single year, sending the population soaring past 22 million. In Boca Raton, a modest 3-bedroom home that sold for $480,000 in 2019 fetched nearly $1 million by 2022. Bidding wars were the new normal. Buyers skipped inspections. Some had never even set foot in Florida. From Coral Gables to Jupiter Island, Governor Ron DeSantis called it proof of leadership, not luck. Low taxes, open schools, and a business-friendly pitch had created the new promised land. But even then, cracks were starting to form beneath the glossy listings. Shine on the surface, cracks underneath. In West Palm Beach, the average home price hit $540,000, but so did the average monthly payment. Insurance premiums crept higher with every renewal. Closing costs ballooned, and locals found themselves priced out of neighborhoods they'd lived in for decades. The headlines remained bright. The reality didn't. While some saw a boom, others saw a bubble forming, fueled by hype, hidden costs, and insurance math that no longer made sense. Insurance meltdown, the silent deal breaker. Here's what the headlines often skip. Since 2022, at least 6 insurance companies have failed in Florida. Homeowners scrambled to find coverage just as hurricane season began. In Miami-Dade and Broward counties, annual premiums have now soared past $6,000. In many cases, that's more than property taxes. Some condos have seen special assessments over $10,000 just to keep the building insured. The private market has pulled back. Citizens Property Insurance, the state's emergency backstop, now covers more than 1.3 million homes. That's nearly 1 in 8. And here's the kicker. If a major storm hits, every homeowner, whether they're with Citizens or not, could be on the hook for emergency surcharges. The safety net? It's fraying. Big money cashes out, quietly but quickly. In early 2025, Blackstone, one of the largest asset managers in the world, began quietly dumping homes across Florida. Properties once worth $490,000 sold for $360,000. That's a 27% drop. This wasn't a minor adjustment. It was a calculated retreat. Condos, single-family rentals, even warehouse portfolios were sold off, fast and at a discount. Wall Street isn't waiting for the next storm. They're already gone. A storm that never landed and still shook the market. Then came Hurricane Erin. Winds peaked at 160 miles per hour. It never made landfall, but it didn't have to. Buyers fled, lenders froze. Pending deals collapsed overnight. In Fort Lauderdale alone, more than 1 in 5 home sales fell apart in just 1 week. It wasn't the physical damage. It was psychological. Just the threat of a direct hit was enough to paralyze the entire market. And in a state where memory of Hurricane Andrew still lingers, fear is always just one forecast away. Unsold homes and a vanishing migration boom. Nearly 41,000 homes now sit unsold across the Tri-County region, a 61% increase from last year. Pending sales have dropped. Time on market has doubled. Buyers now ask for insurance credits, roof repairs, and prepaid taxes, if they show up at all. And migration? It's slowing. Families from New York and Illinois are suddenly asking agents about Atlanta, not Boca. They want safety. They want stability. And they're no longer convinced that Florida has either. Building codes versus reality. The limits of preparedness. After Hurricane Andrew flattened South Dade in 1992, Florida overhauled its building codes. Today, homes in Miami-Dade and Broward must withstand winds up to 200 miles per hour. And it's worked. On paper. Post-storm surveys show homes built after 2002 suffer significantly less damage. But that doesn't help if you can't insure the roof above your head, or sell the home when buyers vanish at the first storm warning. Stronger beams and bolts are good, but they're no match for a broken insurance market. Dantas's big gamble. Tax rebates or headlines. When the crisis hit full speed, Governor DeSantis made a bold move. He proposed eliminating property taxes for homeowners and handing out $1,000 rebate checks. He called it a necessary correction. Critics called it a stunt. Regardless, the urgency is real. The market is wobbling. Political pressure is mounting. And homeowners are starting to realize that a tax break doesn't fix a broken market or rebuild after the next Category 5. Florida's new reality. Sunshine with a storm warning. Florida's housing market isn't collapsing, but it is correcting. Quietly, rapidly, and without the headlines it once thrived on. Insurance costs are climbing. Investors are fleeing. And the next storm could be the one that tests the whole system, financially, politically, and structurally. The question now isn't whether Florida will stay sunny. It's whether the dream can survive the price tag. If this opened your eyes, give it a thumbs up. Subscribe if you want more hard-hitting, no-spin breakdowns of what's really happening in the housing market. And drop a comment below. What do you think is the biggest risk? Rising premiums, vanishing buyers, or the next big storm? Let's talk about it.